Hello, Warriors. GM, good afternoon, good evening, wherever you are on the globe. How's everyone doing? Hello, Ren, Jeffrey, Money. Money comes and money goes to Lar. Didier, Hugo, Michael, everyone. Okay, so Blake and I were talking about the rotation that was happening within the market yesterday with that vaccination news. And here's S&Ps. All right. To me, almost looks like a blow-off move. We pulled back all the way to the prior high. Everyone see that? And we were talking about the rotation out of Nasdaq, stay-at-home stocks, FANG and MAGA, and the most loved stocks for quite some time. Most of the action went into cyclicals and unloved stocks. And take a look at the difference between the candles. So this is the S&P daily candle, and this is the Nasdaq daily candle. You could really, I'm going to do it. I'm going to call it a key reversal, although it missed the high by a little bit. It was an outside day to the downside. So even within the market, you have to be aware. You have to be aware of sector rotation. So, I think this is a pretty good follow through as well. This may be a significant top if we take out the 50-day moving average here. It's not that far below today's lows. It looks like 11,486. So, it's about 160 points away. It is Tuesday, so it may try and rally, but to me, this is pretty negative action. I mean, could yesterday have been people who buy headlines today sell newspapers tomorrow? Could that be? All right. So, and I did talk about if the dollar rallied, the market won't like it. And here's the Dixie. So, I'm tempted to short it right in here for a turnaround Tuesday type of trade. What I would really like to see is one more washout in the dollar to clean out the rest of the bulls down here. And while that's happening, I think the most you could look for, because of its relative strength, is the yen pulling back maybe to the 104.20 level. There's your daily. So it is possible. And this is a scenario I'm looking for. I'm not saying it's going to happen. It's not a trade. Again, I'd like to see one more low in gold, take out the one more low in the Dixie, take out this 92.20 level. I still think that there's a chance, and this is where I'd be interested in buying the dollar down here. So what I'm saying is the relative strength in the yen. If we get one more break to clean out the lows here, these lows 91.77, and I have confluence at 78.6 back and the blue speed line here. And while this is happening, I only expect some type of fib retracement in the end after this explosive move, maybe get some type of ABC back down to, between 460 and 420. So if the dollar, I'll wait for the dollar to make a new low. And if it doesn't happen, it doesn't happen. But if it does happen, this would be my preferred long. Okay, this would be my preferred long because I don't think we're going to see these levels for quite some time. In fact, I think a very bullish case along with yields is happening. But, if the S&Ps and Nasdaq continue to sell off, we could have rates soften up a little bit for a few days like they did after the election. We're at this resistance level in, the 10-year, although it's looking great. We could pull back again, although I'm still looking for 160. And when you think about it, What triggered everything and even the market to pull back? It's really all about yields. I've talked about that higher yields could cause a problem for commodities and precious metals. And if you could learn anything from yesterday's action, is that although a lot of people say the yen is disconnected from a lot of correlations that it normally have, I've seen it within a day or so correlate pretty well with the rise in yields as it went up, and as it went down, gold had its rally before the yen bottomed, right? And then the yen exploded to the upside and the metals collapsed. So getting back to the metals, I wouldn't be surprised to see a retrace back to the pivot. Looks like we're, flagging here. There could be more left, back to 1900, 1920 is a possibility, especially if the dollar goes to new lows. This would support a precious metal rally, right? And I don't think we're going to go right to new highs. So, maybe this is going to be an A and we get some type of B wave. Right here, to me, it's a no man's land, but do some fib work. And 1920 has been a battleground in gold. Maybe it doesn't have enough, enough muscle to get back up there. But if it does, I still think it's a short. When I look at targets, I know everyone's talking about 1800. I see more like the 50 week as being a possibility here, and that's going to be under 1800, more like 1740. So those are my looks. I think the key takeaway from yesterday was Nasdaq. There's your weekly. It's going to take a lot more to have a 2-week reversal, 11,684. But this is not a bullish chart to me. Okay. And yesterday's action was pretty ugly. Just to give you an example of a few of the markets. Look, Apple broke, hasn't been able to get through its 61.8 level. Here's your daily. All right. This doesn't look so great to me. It's a second lower high with the Nasdaq almost making a new high and the S&P is blowing out that high. Here's Microsoft, failed from 78.6. Google made a new high, but look at the divergence that we have here in Google. And Amazon, the sweetheart of all stock traders, and Jeff Bezos is a multi-gazillionaire. Look at the action in Amazon. It still looks heavy to me. Still could be some type of topping formation with a neckline down here, and wrap it up with Punham. Does anyone know what Punham means? Amir knows what Punham means. Any guesses? Punham. It means face. Ren knows. How do you know that, Ren? Punham means face. So here's there used to be a bar on Rush Street called Faces, and us guys from Skokie called it Punhams. All right, so here's Facebook. Failed from 78.6. Pretty negative day with all the euphoria, don't you think? Get out of your MAGA and your FANG stocks and wait for a washout to recommit. That's my belief on this. Okay. Oh, I said Punhams before. I know I have a habit of repeating. Once you get to be my age, you just keep repeating yourself over and over again. Like this, I've been doing this for 3.5 years. Good morning, Blake. How are you today, buddy?
Hey, man. Good morning.
Hey, bro. How
It's
are
a Marine
you?
Corps birthday, so I got to give all the Marines out there hoorah.
Thank you for your service, buddy.
Thanks. Boy, it was my pleasure.
Oh, come on.
I'd love to do it again.
Actually, you could ventilate everything you feel, right?
Oh man, I actually no. I wish I could do it again and just travel to those places again. I have to admit, back then is a little bit different than it is now. I was it was pre-internet, so I had the pleasure. I say pleasure. I say this because I had the ability to go to different places before the internet, which was pretty unique. You know, when I just posted a picture online with me in Africa. I remember when we were the first ones there. I mean, the first ones. So, you know, for a lot of the people in Somalia, it's the first time they've ever seen an American, B, a big American that's fully armed, you know. I mean, other than they might have seen glimpses on TV, we must have looked, because I could
like
see the
giants.
looks in their face. Yeah, I mean, we look like aliens or giants or whatever. You know, now everybody's got a smartphone, you got internet to a certain extent. You can see, you know, nothing's a mystery. But back then, you know, like when I went to Indonesia and you know, Japan, and I mean, it was, when you're traveling, and you remember, Dale, back, you know, pre-internet,
yeah,
it was,
you could really get away from things. Now you can't get away from things.
Yeah,
You know, you have
yeah.
peace
Well,
where you go.
it was like kind of, it was just being really unique, I guess. So, you know, I would actually love to go back to the places that I've been, minus Africa. That's the one place I really have no desire to go back to. But I mean, I really wouldn't. No desire. But I'd like to go back just to see, you know, some of the places I've been, especially like Guam. I spent a year and a half in Guam, and that was I was supposed to go to Desert Storm, and I didn't, because I missed it by a week. I was in School of Infantry when they declared the ground war over, and so half of us got deployed at different like locations, and I got the ability to go to Guam for a year, almost a year and a half, and then a lot of people went to go just clean up, you know, bodies and wreckage, and you know, like, you know, that stuff. And I didn't get to go, but so I went to Guam, and it was a great deployment. I mean, I really enjoyed my time there. A beautiful island, minus all the snakes. So anyway, there's a lot of snakes on that island. I am going to I'm going to take a little bit of time today to talk about the markets. It's been pretty slow overnight, which is good, because yesterday was pretty hectic. I don't know if you saw the price action yesterday, Dale. It was crazy. Right? And so let's first of all, let's talk about, I just tweeted out a chart of the Nasdaq, and I want to talk a little bit about this particular market, because the Nasdaq has been on fire. And if you don't, by the way, if you're using ForexAnalytix, we just got long Euro New Zealand a little while ago, and I'll tell you why here in a bit. The reason why the Nasdaq might be ready to pull back is that there undoubtedly is going to be, going into this next year, a vaccine, some sort of vaccine, therapeutics. So, you know, Regeneron, Eli Lilly, whoever is going to be making some sort of you know, vaccine, we're probably going to get. And you know, if you take like a normal flu vaccine, is about what, 50% effective?
Yeah.
Dale?
Yeah, something like that.
Something like that. You know, they're looking at like the
unheard of. Well,
yeah,
unless
it's like
you go to
90%
measles,
but you know, very small groupings. But let's say you get something that's in the 50 to 60% range, and is out by next, you know, summer. In the public, you know, you're gonna see people's lives return back to normal, and that means that, you know, stocks like, you know, Netflix and Amazon are going to come down a little bit as life normalizes. So let's imagine that happens. I would assume that the Nasdaq 100 probably comes off a little bit. Is it going to, you know, collapse and see 5,000-6,000 again, or 7,000 again? Probably not. I doubt that. But, you know, that doesn't mean we can't come down, you know, and retest the 200-day moving average, maybe even come a little lower than that, depending on what's driving the markets at that point. But I think you have to be a little careful because we do have a double top setting up, and a double top could be measured like this, right? I'm just using this as an example like this, or it could be all the way from down here. You know what I mean? And we could go a little further. I mean, it could theoretically pull back towards, you know, below 8,000 or below 9,000. So I just want you guys to think about that. You know, that doesn't necessarily mean the S&P is going to come down either. You know, the Nasdaq had outpaced the S&P for a long time. You know, the S&P could, now I look at the S&P, and by the way, this is a false breakout, just so you guys know. And that's why I'm long the loonie, short the Aussie, long the dollar Mexican peso, bought some Euro New Zealand this morning. And let me show you the reason why I bought this, because I typically don't go over this
for risk pair. Off, right?
I am. So look at this daily chart, 2017 trend line from February 2017, intersects again at beginning of end and beginning of 2019 and 2020, and where we're at right now. We just hit that trend line, and you know, there's horizontal support, and there's a Gartley pattern, and that means that there's a good chance that there's a bounce here. Now, does that mean that, you know, we can't break down? No, we could. I mean, you know, hell, we rallied to new highs from here. Then, you know, the Euro New Zealand is probably going to turn lower, but I think the risk reward is good for longs. And that's why, again, if you use ForexAnalytix, you know, we had an active pattern in play this morning down here at 172.60 when we were trading at 172.60. It's already, you know, it's bounced 40 pips, but you know, this currency pair is one that could actually go quite aggressive. So anyway, just, you know,
nice luck.
No, thanks. All right. So like I said, I typically don't go over the Forex or over the
patterns in play,
Euro New Zealand, but I thought I'd do it with you guys this morning. So let's get into the other charts, because we should be looking at all this. Okay, so here's the S&P. So the highs yesterday were, and remember the market. Okay, so let's think about this again. I want to talk this out too. So the S&P rallied and then it sold off, and you're like, well, why did it rally and sell off? Well, we did have a, you know, it looks like really good news on the vaccine front. So when there's a, you know, possibly a vaccine coming, what that really means is, hey, things might come back to normal a little bit, but we might not get, maybe the Congress may not be so excited about doing some really large full tilt stimulus deal this next year, especially with the new president. And you know, there's gonna, you know, the liquidity might not be there, and plus the Fed, you know, we've got an economy that's actually, you know, if you look at PMI numbers, you look at the bounce back in jobs, we still have permanent job loss, but you know, the economy is not on bad footing right now. So the Fed might be more reluctant to do more. And so, you know, we got the buy the rumor, sell the news type event on that. And then on top of this presidential election, which by the way is not.
Who is our president?
Huh?
Who is it?
Donald Trump right now. Right.
Okay,
it is.
Good answer. All right.
But, you know, he's
maybe
still
forever.
You know, and he's not going to concede. I told you he's not going to.
He's not scorched earth.
Whether, you know, we could have a constitutional crisis by January.
We could.
I mean, next thing you know, you've got the House appointing who the president is. You know, that,
well, by then we'll have martial law, Blake. There'll be so much unrest in the streets between both sides.
There could be. It could be. Oh, I tell you what. I mean, I can't go into all this.
I know. Forget. I'm sorry.
But I'll say this. You saw all the celebrations this weekend when people thought that, you know, or think that Joe Biden won or Donald Trump lost, however you want to look at it. that would turn extremely sour right after. You know what I mean? I mean that could turn immediately to violence. So I'm very skeptical, and I'm very cautious. And
I'm very worried.
I just want to get past. I just want to figure this out. I want to get to January. Well, we can actually take a pit stop for Christmas, and then after that, I want to get straight
time
to
machine. You know, Blake, I just want to bring up one
after.
thing with this vaccine. In our last interview with Peter Bookvar, he said the market would rally until we had a vaccine. I mean, that was a pretty good forecast, wasn't it?
Yeah, because again, a vaccine is the ultimate buy the rumor, sell the news type of event, in my opinion. So, but anyway, and I think that's, again, you have to imagine the leadership is in Nasdaq, and when you don't need, the Amazons, and you want to shop like a normal person, that's where the risk comes. Okay, so if you're looking at the S&P, I marked up resistance back at 3,600. We're at 3,544 right now, and we have to get back above 3,600 to be a breakout. So I'm keeping us in range. A dip below, I think we got to get all the way back down to 3,440, what we wrote down yesterday, in order for me to think, okay, the market's ready to, pull back a little bit. I still think that it's, we're still in this range, but in order for us to get down towards, excuse me, sorry about that, guys, to the lower end of this range, we have to break through 3,440. I think we wrote that down yesterday. Okay, let's talk about the euro. Okay, so the euro, we rejected 119 yesterday. By the way, this is an outside day, even though 117.95 were both the lows for those 2 days. That's an outside day candle, false breakout. So now any move back to, what's this previous high? 118.85.
Yeah.
That's resistance, right? Okay. Okay. Support. That previous high, let's go over to a 4-hour chart. So this previous high right here, and you can see the low. If we get below 1770, I think that's support right now. So 117.70 is support. Okay. So the pound, we hit the 618 retracement, 127% extension at 132.73. Today's high is 132.72. That's obvious resistance. If you use ForexAnalytix, you got the update an hour ago when we were at 61, that would be resistance, and it's turned 30 pips lower since then. So now support's going to be back at 131.82. No one knows why it's up here this morning. So, and a couple of the banks that we follow, and we talk to their analysts, they're just like, they're like, this might be preemptive. And then Amanda's like, well, maybe, they're buying ahead of some pretty good news. So I don't know why we're up here, but you got to be a little careful, because it's turning bullish. And I believe today, while we're back above this 132 level, or 131.80, you got to be bullish right now. But, you still, I think you still have to be a little cautious here, but it could be telling us that maybe there's some good news coming out. So the Aussie, this was our chart of the day yesterday. Saw a reversal at the 78% retracement, horizontal resistance. That is key now. We might have a nice little head and shoulder pattern developing. You can see, and we're trying to crack this right now. So a break back below 172.40 or 172, 72.40. 40. That would be bearish. And I'm going to keep us in range, but that would be near-term bearish if that happened. I mean, resistance is all the way up here at 73.40. I hate writing that all the way up there. I think today we'd have any move actually up to 73 cents should probably cap us realistically. All right, let's go to the Kiwi. Now the Kiwi is in breakout territory, just so you know. We're above 68 cents, but if we break back below 68 cents, that would not be good for the bulls, because I mean, it looks bullish right now, but look at how divergent, you know, relative strength is on this rally. It's the relative strength is already signaling that we might come down again. So next resistance would be 68.74. You know, I haven't written it off yet, but okay. Dollar Canadian. So the dollar Canadian, I bought this yesterday, well below 130. I think I own it at 129.60. That's where my cost average is. I have to readjust my cost average every day because that's just kind of how it works with JP Morgan. You got to re-input your stuff because I'm marked up. I'm marked up at the close, so I have to just kind of write down where my averages are at. So I never quite know because I'm constantly adding a little or selling a little. Anyway, what you'll notice here is we held horizontal support, and that was pretty key. And we closed back above 130, which means that this was a false breakdown, right? So now if we get back above 130.70, 130.85, that would be, it would squeeze. Okay. So, you know, I'm not putting us in bearish because of what we held yesterday. So now I do think that we can find support on any dip, but that should be limited to 129.90 now. Okay. Dollar Mex, another one where I picked up some yesterday. Why is the 78% retracement of this entire move. Once we plunge through the support right here at the 2026 level, I wanted to see if we were going to hold all the support down here at the above 20, and we did. And if we get above 2085, wait, hold on. This is 3085. Yes. Okay. So this is 2085, which really, 2084. I'm sorry. I mean, it's like 2082, which is pretty key. And right now support, support is 20.03, which is basically this 78% retracement. Moving right along. Dollar Swiss. What a big reversal yesterday in the Swissy. Wow. I mean, Friday we tried to push below 90 cents. We closed back above it. And then what a move. We're at a downtrend line right now. So if we break today's highs, which comes in at 91.75, the next move would take us to, in my opinion, above here, the 127% extension, which would be 92.65. So, and now support.
Blake, you put the S&P in.
I did. Oh, I did. Thank you.
Yeah, it's okay. It's okay. Don't worry.
Thank you. I can't even see my keyboard. So because I have this big microphone in front of my face. So when I'm typing, it's like, I can't see exactly where my hands are at, or so a lot of it's a guessing game. Thanks. Okay. So you can see we've had this like right here, a lot of support. This is like a big level that's provided support here, resistance here, support here. My assumption is if we dip back down towards this 90.90 level, which is basically 91 cents. I think we'll find support if we do dip. US dollar, Norwegian krona, big support down here at the 618, but we have to get, I'm going to write down the spike low yesterday, which was 896, 897. And then we have to get above 914 in order to get a squeeze going, which would be right here, or it's actually 912, sorry. So in order to get a squeeze going with this bad boy, we'd have to squeeze back above here. Squeeze back above here, right? And then if we get back above that 912, we'd see a really big squeeze. Stelios, you gotta leave here in a second.
Yeah, about 5 minutes. Yeah.
And you got to leave in 5 minutes?
Yeah, sorry.
Give us a macro rundown before you got to go.
Well, there's nothing major yet, but
why is the cable moving?
The cable.
Why isn't Donald Trump giving up why haven't we got Brexit yet?
I don't know about Trump, but
why haven't we?
Rishi Sunak said that we might be close to an agreement. Again, this is just nothing firm yet. But also, average earnings index came in a lot higher than expected, and it's a big gap now from earnings growth to inflation. So that's good for the consumer. So in general, relatively good news from the UK, but obviously nothing firm yet. That's why the cable is moving, and I think that's why the cable is moving. And people are saying, "Oh, is there going to be something announced that we don't know?" And people are suggesting that UK data gets leaked. I would say never. That's never happened in the history of the UK or any other country. But now, all jokes aside, that's what's moving the pound. What else did I want to say? I want to say Norway, for people who follow it, CPI came in at 1.7%. Higher than previous readings, so still looking pretty solid, near the 2% target. Some other data we really don't care about. So really, apart from the main news, which was the potential vaccine yesterday, which we yet have to get more information on it and confirmation and everything. I think people are a little bit cautious after yesterday's rally, and I think they're smart to be a little bit cautious. But yeah, I mean, that's the main thing really now that's driving everything, the vaccine. And I think Donald Trump and Joe Biden, I think there is eventually going to be a handover. He can go to courts, he can do stuff, but really,
really
stop it? I don't think so. Huh?
You really think so?
I think eventually he's gonna throw the toys out of the pram, as they say. But in the end, what can you do? The Supreme Court's have to decide, and unless there's evidence about something, there has to be a closure. What do you think can happen? Do you think that's? Okay.
I just don't know if that's going to happen. I don't know. Just knowing what I know about Donald Trump, I just don't know if it's in his DNA to do that.
He's going to fight it, that's for sure. I'm on neither side. I'm Greek, obviously. I don't have a position, but he's going to fight it. But at the end of the day, unless there's evidence, what can you actually do? You can delay, you can go to courts, but then at some point there's going to be a decision.
Yeah, so, and actually, I'm wondering if he will actually at some point. And it's always been my opinion. Just by the way, I believe that if he lost this election, he will start his own media empire. I've long believed that. And there's a lot of speculation he could run as an independent in 4 years. I totally could see that.
Yeah.
And he could, absolutely. But the problem is it really fracture the Republican Party as it is moving forward. But I really think that he might get a lot of political pressure from other Republicans, like, hey, you need to concede or whatever. And maybe the pressure becomes too great. I don't know. I just don't see it happening. I really don't. But whatever happens, who knows? I mean, I'm just, opinions are like buttholes, and we all have them. So let's,
Yeah, let's
anyway,
see.
I know you have to get out of here, and Steve is probably here and probably wants to speak to you. So I should finish up with analysis.
Okay.
Any last final thoughts?
Don't eat yellow snow. No, I'm kidding. That's it. I have to
go. It doesn't snow in Athens, for crying out loud. How do you even know that?
Every 5 years, maybe. Yeah. Okay. Thanks, guys. And sorry I have to run. Thanks.
Yeah. Thanks, Delius.
All right. See you, buddy.
And Steve, and I can hear Steve's voice. Dale's here. Let me finish up what I'm doing here with the analysis. I'm going to pass it on over. So as far as the dollar index goes, let's just go ahead and write that up. The dollar index has not come out of this range. And the problem that we have here with the dollar index is that again, this is looking, let's take back a couple of days. The dollar index was breaking down through support. Okay. And then we got a reversal yesterday. And so, what does that mean for the dollar? Well, probably means we're going to squeeze a little bit further. We're still in this, you can see that range that this is the one that we put, a week or two ago. We're still in this range. Resistance today should be around 93. Support on dips down to 92.35. I don't think this market's going too far today. I may be wrong, but I don't think it is. Unless we just start to implode with equities. If stocks really start to sell off, and they continue the downtrend that we saw yesterday, then you might see the dollar firm up a little bit more. Now, I do want to talk about the dollar yen. I'm very happy I didn't have any exposure with the dollar yen yesterday. This move, according to the banks that we follow, and I read it at 3 different banks, short-term traders got just carted out yesterday. Now, I'm going to say proudly that Amanda was long the dollar yen, and she was long, and she made her entire month yesterday, and she's in our chat room, guys. But I wasn't in that trade, and I mean, this is a massive move. I mean, this is just that. I mean, the whole short-term spec market was short dollar yen with all the banks. They were just short dollar yen because of the breakdown through 104. So all of them had just been short, adding to positions. And that squeeze, there was a lot of money lost yesterday. And if you took a loss yesterday, don't think you're the only one, because there were a lot of big traders that got carted out on, I'm just saying, I read a lot of different comments yesterday, and I'm like, man, I'm glad I wasn't in that. And I actually tried to short the New Zealand yen yesterday at this multi-year trend line. Tried to short it here. I think that was the world's fastest squeeze play. I shorted it like right here at like 72.30, and I was out at 72 like 65 or something, like 10 minutes later. So I tried, but anyway, it didn't work. All right, dollar yen, big resistance trend line here. That comes in at 105.60. Support, you can see the overnight lows came down to 104.82. I have to write that down because I figured that we'd find buyers below 105. I didn't know how far we'd go. So it looks like 104.80 is support. Okay, we get above 105.60, we're going to go above 106. Then you have to flip to bullish here. So just saying. Last but not least, gold. And I know a lot of you guys, and I'm not reading any of the comments right now. And by the way, if you guys comment to me, I don't read them. So just so you guys know, I've got to move quickly to get all this analysis done with you. And so I don't typically read your comments, but I know some of you are like, well, I was long the dollar yen, I was probably long the dollar. I'm sure a lot of you guys are making those types of comments. And if you were, congratulations. Like I said, most people were the institutional traders were on the short side of that. So, good for you. Gold. Now, this is one that caught a lot of, this is another move that caught a lot of traders off guard. Everybody was bullish gold. Everybody. That wasn't an uncommon theme yesterday, being bullish gold. And that move, I mean, if we get below the 38% retracement, which is right here, guys, we get below 1835, gold's going to sell off hard. Oops, I'm putting an asterisk here because I think it's really important that we see that. If we break through this 38% retracement, these lows, I wouldn't want to be on the long side because I think we trade right down to 1700, 17 something. Resistance right now is 1890. Okay. All right. So I'm going to leave it at that. There's your bias chart. It's finito. It's done. These are, even though they're bullish right now, they are on the cusp flipping back to range. Just letting you know, there's some important levels around there. Okay. And for those of you that served in the Marine Corps, happy birthday, Marines. For those.
How many years now, Blake? What is it?
What?
What year anniversary is it? The birthday.
245th. Is it 45th? 245th. Yeah, 245th. Wow. Yeah. Yeah, crazy, huh? Now, let's see.
I tell you, if you haven't seen that series, Pacific.
Oh, it's good. It's really good. I got out 26 years ago. I went in 30 years ago. Crazy. Yeah. So anyway, happy birthday, Marines. And for those of you that served in the military, tomorrow is Veterans Day. Thank you all for your service. No matter what country you served in, you served for your country, for freedom. And I'm sure everybody in your country appreciates you, including myself. So thank you all for your service. Tomorrow's Veterans Day. We celebrate that here in the United States. All right. Steve,
how about trading veterans?
Except for Steve. Steve doesn't really qualify.
Yeah.
That's mandatory service.
Steve was in the Army. Steve was in the Army Reserve.
It is mandatory here.
It is mandatory, and I believe it should be in the United States. I wish it was. I wish military service was mandatory. Honestly.
Steve used to chart missile patterns for the Greek Army.
From all the ones that are flying in from Turkey.
My official designation was plane refueling in the Air Force.
Oh,
see, okay. So wait, hold on, Steve. So you guys don't have a Veterans Day in Greece because everybody's a veteran, right? I mean, pretty much, unless you got, I don't know what the stipulation, and we don't have enough time to talk about this right now, I'm sure, but I'm sure unless there's some sort of health reasons that you can't serve, maybe, but everybody's got to serve. So anyway.
Yes, if you are a man and capable, I mean, of course, if you have some serious, health issues or whatever, you're excluded. But other than that,
it's compulsory. Yeah,
it is compulsory to go after school unless, you enter a university, in which case you can get a postponement. So I served, quite old, quote unquote, after my first university degree. It's when I decided to, go do it, get done with it.
They call you Pops?
Actually, I was like 24 years old, and yeah, I was,
like their dad.
I mean, I wasn't the oldest, but I was above the average age. Yeah.
We had this guy that was 26, and we called him Grandpa. I mean, his name was Greg Deason, I remember. We're still friends. He's the manager of a car dealership in Houston, Texas now, and he manages he's like the general manager of like 3 big dealerships. He's done really well over the years, but yeah, he was Grandpa. We called him Grandpa. No joke. At 26 years old. Anyway, all right, guys, I'm out of here. Good luck today, Steve. It's all yours. Dale, it's all yours.
Okay, see you, man.
Hey, so Dale,
yeah.
Since I literally just arrived.
You want to know what people want to see?
And that's A. B, what did we talk about? What is left for us to talk about before we go
we
to
talked about the
questions?
rotation in the stock market and Nasdaq being much weaker. Blake showed the false breakout in S&Ps.
Speaking of which, Dale, this is one of the charts I wanted to talk about yesterday, which I didn't have the time to do so, but even better because, as you see, it's even more relevant today. This is the Nasdaq to the S&P ratio.
Right.
And this orange line is the line from the all-time high until recently during the Nasdaq bubble to this ratio. Peculiar or not, this same high is now more or less also serving as the trend line, neckline to this head and shoulders formation. So it's quite interesting.
Yeah, it is. I mean, really the face and mega stocks, I've been talking about it for weeks. The only one that made a new high was Google. Amazon did not make a new high during this whole blow-off period. And a lot of them, in fact, the individual issues are heading towards a similar formation that you're showing on the differential.
So bottom line, yes, if there is conviction that there should be a rotation, listen, my opinion is that all the celebratory price action is extremely premature, extremely. I mean, how many times are we going to reprice that there is going to be a vaccine? Yes, there is. Okay, we know that. There are going to be actually several vaccines. But we've mentioned before, and there is no reason actually for me to keep repeating myself that, even under best circumstances, I think we're going to be lucky if we can have somewhat of a normal summer. So, the adventure and the endeavor for the economy is far from over, and I think it's rather premature to start pricing in that everything is going back to normal like tomorrow. It isn't. In any case, if the market decides to do so, this is the index you should be looking for. I mean, this hybrid index, in essence, this synthetic index, the Nasdaq to the S&P ratio. I think it's going to tell us all we need to know. And as I said, it is currently testing a very, very key support area, confluence of supports, actually. So I think this is worth noting. And I do think that if we actually see follow through to this, look at this, right, Dale? Just look at this. Put this in context. And imagine, how much it can end up repricing, right? What troubles me with the whole rotation theory is the Russell. First of all, the Russell yesterday at the highs finally managed to create an all-time high, which it hadn't. It was diverging, if you remember. It was one of the indices we were looking for there. So yes, it is to benefit and it is to overperform if we have a rotation, and if the market believes that the economy can go back to normality, the Russell should, somewhat close the gap. What troubles me a little bit is the type of price action we got yesterday. So look at the gap higher and look at the candlestick we left behind yesterday, right? Same can be said about the rest. I mean, theoretically speaking, yesterday we did fulfill the minimum expectations of the triangle, because the minimum expectations of any triangle is what, Dale? A higher high. Just that. Yeah, that's the minimum expectation. It's not the normalcy. I mean, under normal circumstances, I would want to see the 161.8% getting hit at 38.23, or even the 100% extension of the range of the triangle, which is just below 4,000. Quite an impressive reversal yesterday. I mean, think about it. Yesterday, we closed positive more than 1%, but have you seen a nastier candle at a market that closes up above, more than 1%? It's, it's not frequent. Having said
hell of a
that,
wick. Hell of a
yeah,
wick.
for hell of a wick. Having said that, we, for the time being, are just retesting the broken triangle's trend line support. So nasty candlestick yesterday, but do we have any concrete evidence that something has really broken here? The answer is no, because in order for me to get a lot more skeptical, I would want to see the index slip through the triangle once again, which for the time being, it hasn't done. Another divergence worth noting here is the fact that the Nasdaq actually still holds within its triangle. Yes, it did intraday break above it, but since I always like to look mostly at the daily charts, as you see on the daily chart, we never broke through the triangle, right? We just left a wick above, and we didn't even intraday post a higher high. Of course, the reason we just explained, because the market was yesterday in the mood of repricing, how things move forward from here, that the economy might go back to normal, and that means that a lot of the extremely overvalued stocks that held their gains due to the belief that we can keep living in a world that everything is going to be digital, and everything else is going to go to hell. The market had to rethink a little bit about it, and reconsider that, for example, companies that had like hundreds of times future earnings, like Zoom and all the Zooms of the world. I mean, if things go back to normal, like within a few months, which we hope it will happen, are they really worth that much? The answer is obviously not. But mostly, almost nothing is worth as much as the market is pricing it. Yeah, there are exceptions, I can admit to that, but from the popular stocks, I would have to say that more or less nothing is worth what the market believes it's worth. So I'm paying attention to the Nasdaq and this triangle, and I'm paying attention to the S&P and seeing if it's going to slip through back to the previous triangle. And I think this is, the main barometer for risk. Now, having to do with crude oil did pare back some of its gains yesterday, but really looks unfazed. And crude oil does look like, irrespective of the pullback we had yesterday, that it wants to break higher and continue. What tells me that, first of all, the fact that today is another positive day so far, and yesterday, despite, paring back its gains later on the day, it still closed, quite positively. And the candlestick, it does have, an upper wick, but in comparison to the body size, I mean, nothing to really talk about. I'm also seeing this trend line resistance that has been broken now on the RSI. So I think that crude wants to move higher, and that makes me even more skeptical about fading risk, just because it had a lot less of a positive day yesterday than people initially expected it's going to have. Now, as we assumed yesterday during the webinar, although it was halfway done in selling off, gold would had a very bad day. That was more than obvious. The same was obvious with silver, and they did. Now, theoretically speaking, we retested yesterday the previous low. Can we go lower? Yeah, it's very likely. I still like the 1800 to 1820 area, though, as long as the sell-off slows down. I mean, I don't want to see another day like yesterday back to back, because if we slice through 1800 or 1820 with this type of momentum, I don't want to buy. I don't want to catch a falling knife. I still believe that gold and silver, if you close your eyes and buy it anywhere here and open your eyes again in a year, they're going to be a lot higher. I mean, I have no doubts in my mind about that. But that doesn't mean I want to buy them at a bad price. And if they sell off like that, I have to start looking for lower prices. For example, the next area of interest, if we break through 1800, is going to be like 1745, and the next after that, it's going to be like 1690. I wish we can see prices like that. I very much doubt it, that we're going to be so lucky to buy so cheaply. But you never know. In any case, 1800 to 1820 remains a buying zone, in my opinion. But as I said, monitoring how we get there is as important as the level itself. Same thing with silver. Silver, didn't actually close back within this triangle, and who knows, is this the triangle or is that the triangle? You know what I mean?
Yep. Silver
that
held up
might
better.
as well be the triangle here, right? This one.
Yeah.
This one. So, there it is. There's your chart here in silver. Above like 26.20, we've broken out. Below roughly 23, we're breaking down, in which case, instead of a triangle, we have some type of a big channel. Then we have to take the parallel of this trend line and see where it takes us. I'd say closer to 20. That would be a dream come true, if you ask me. I mean, I wish I get the opportunity to buy silver close to 20. I still think it's probably not very likely, but you never know. You can always, hope for some kind of a present. As Blake used to say in his morning ads, the show he was doing for like more than 10 years before, we made ForexAnalytix and Face. He used to sing that it's a gift from the Greek gods. So who knows? We might get a gift from the Greek gods and see silver near 20. Now, the DXY did reverse nicely yesterday. Has this invalidated the downtrend in a way? The answer is absolutely not. The answer is absolutely not, because we still see the rebound as corrective. And I still think there is a very good chance that the DXY is going to accelerate to the downside. There is no evidence that we're really reversing, not as long as we trade below 94.80, whatever that high is. Okay, so don't get me, carried away, especially in markets like this, and thinking that a single day of a specific price action is evidence enough for you to take the other side of the market. You're going to be seriously hurt if that's what you try to do. And if you want to have a recent example, and I've talked about it in the recent past, the only thing you need to do is have a look at gold. If you have a look at gold and look at how many potential reversal days we had in gold during the past several months, and how many of them miserably failed. Here's an example. You know how many people sold gold here due to this candlestick? Do you think they made any money? Trust me, all these people that sold there, they didn't hold to make money and cash out there. They got stopped out when we were trading there, right? And a lot more examples. So a single
That's where I sold it, up there, and then I bought it at the bottom and got long, and then sold it at the top.
Yeah,
bought it at the bottom, huh?
and then made a Twitter account selling your services. Like that you make money at 95% of the trades you take, right?
Yeah. Well, no, I you know what? I wasn't even going to share that system with anybody. It was priceless.
Indeed, you kept it for you.
In my imagination, I caught every turn in gold over the last 5 years. All right. Anyway, you'll see people that pretend they do that. Oh yeah,
it's amazing, and it's amazing that there are people that actually. It's amazing that there are actually people that believe them, and for people
they know the secret of trade. They have a secret.
For people that are. Yeah, for people that are more amateurs, I understand that very, very initially, until you realize that even, I've met a lot of traders in my life. Some of them institutional traders. I mean, my uncle, I've told
institutionalized?
Yeah, institutionalized. Some of them ended up like that. Yeah. My uncle, for example, was like a very famous trader in the 80s and 90s, and he was extremely successful. And I've met some older traders as well through him, etc.
Yeah.
I mean, whoever believes that there is somebody that makes money like 70% of the time or 80% of the time, they really have no idea how trading works, right? No idea.
Yeah.
No idea.
Steve, we have it's interview time, and we actually have a first-time guest here today in Face. Sylvia Bellrock is with us.
Okay.
And it's always nice to have new guests.
For sure.
I like to bring
and some of them end up being very
regulars.
nice surprises. Yeah, and regulars afterwards. Yeah, absolutely.
So anyway, Sylvia's here with us, and I'm looking forward to meeting her and seeing how she skins a cat. There's a million ways to skin a cat, and it's nice to bring. Go ahead.
By the way, to finish up, since I had already pulled
I hope
up
your
the
cat
chart.
didn't hear me talk about that.
Let me see. Aliki?
Kitty, I'm not going to skin you. Okay.
Ya pescate? Huh?
He won't do it.
No.
Yeah. All right.
She's just happy.
She only meows when she doesn't like your calls. I've noticed that when she disagrees with you. Huh?
So, since I had pulled this chart up, very nice confluence of resistances here in the cable. I have no idea, what Blake talked about having to do with it. So, I just wanted to mention this is a pivot area. We get rejected from here. It looks good if you want to be short, but we break out through here, then I think it's the wrong side of the market. As simple as that. Okay, thank you, Dale. Enjoy the interview.
All right, Steve, thank you. Great analysis as usual. Sylvia, welcome to Face.
Dale, do you hear me?
In a tunnel. How about now?
You seem to be a little bit far away from the microphone. It's not that you don't sound.
Better?
Somewhat. If you can raise the volume a little bit, would be even better.
Wait, let me just check the settings real quick.
Make sure that the correct microphone is chosen from Zoom, because if you have, for example, a camera, it also has a microphone, and that might be the microphone.
Yeah, I have here a separate microphone. Let me just check real quick.
There you go.
Better. That's much better.
Is it better? Okay.
Oh,
great.
Perfect.
Oh, yeah, it's great. Well, it's nice.
Share your screen.
Yeah, very nice to meet you, Sylvia.
Nice to meet you, Dale.
Yeah, have you used your Zoom before?
For a little bit, yes, but not many times.
Okay,
there is a green button called Share Screen.
Oh, yeah, I see. Yeah. Let me share.
Beautiful.
Are you able to see my screen?
Yes.
We've got it. Yes.
Great.
All right. So, Sylvia, very nice to meet you.
Nice to meet you too. Thanks for inviting me. I appreciate that. Always a pleasure to connect with some other traders.
Yeah, I'm a big believer in intelligence gathering, and we only have two eyes, and if you're surrounded with people that have good eyes, they could point your attention towards something you may not have seen on your own. So I like to start these off by asking our guests how it all began for you, what you were doing before you got involved in trading, how you got involved in trading. Could you tell us a little bit about the journey that you had at the beginning? What most people didn't train for this. They ended up in this. So tell us a little bit about, your first gig, first exposure to the trading industry.
Sure. So I started a while ago, but before I started, maybe just a little bit about myself. I'm coming from Bulgaria, so I came to Germany a couple of years ago. I think like after I finished, it's around 15 years ago. So I just immigrated to Germany, started to study here, started learn the language, and my whole family was in Bulgaria back then. So I just left them there, tried to, to look for some new career opportunities and make my way here through the world alone, so to say.
Yeah.
And then started to study. After that, I was done and started to work for different projects and companies, mostly as a IT project manager.
Okay.
And yeah, from there, I somehow, while I was studying, actually, I discovered trading, and it was very interesting because the professor who where I went to this university, so he was talking about George Soros, and this was my first connection to trading overall. So I first heard about him and how he made that $1 billion trade, with the British pound.
Yeah.
And I was so excited about that. And since then, everything started. So I went back home, started to study, and started to read books, listen to different webinars and stuff like that to get involved into the market. And I find it pretty interesting since then. And so I kept going and went through a lot of ups and downs, of course, like every trader does, I think.
Right.
And of course, a lot of losses as well. I've went through a lot. So I started with Forex, then I continued with penny stocks, day trading, swing trading, but mostly I kept doing this day trading stuff. And at some point I realized, well, this is somehow not fitting to my personality. I don't like sitting in front of the computer and watching all day the charts, every single tick. And that's not something what I do. I know there are a lot of people who do that successfully. And I think this is a very challenging skill to have as a day trader and to be a successful day trader. But I realized this is not something for me, and continued to develop myself in swing trading, to read books, continue to try more in the stock market. And that's how I started developing myself and start to see consistent results. So after a while, I just stopped day trading, because day trading was more for me like, all the profits which I made from swing trading, I gave back while day trading. That was how it was for a long time.
Yeah, well, it's a process, and it takes time to find what fits your personality. So you have to sometimes do the thing that doesn't work for you to, guide you to something that, fits your lifestyle and personality. And, that's something Jack Schwager said to me once, that most important thing that traders do is find something that fits their personality. Did you have a mentor, or were there any books on charting or any major influences that helped you along the way?
Yes, I had a mentor at the beginning. It was someone in the US area. So it was very interesting, of course, to connect with him. He always motivated me and kept me going. And I had a lot of setbacks, of course. I wanted to quit a lot of times in the past. But then knowing from where I am coming from and how is it there, I'm just someone who keeps fighting. But I have to say, really, trading was one of the toughest thing I have ever done. Even after this time coming here to Germany and doing all that on my own, this was tough enough. But then trading was really also maybe as tough as all that whole my journey. So it was really tough. And I had a lot of situations and moments where, you're making 2 steps and then you're going 3 steps back, and this back and forth until you see consistency. So I really had a lot of points where I wanted to quit and just stop. But the thing is, when you have a mentor, that he always somehow managed to drag me back into trading and keep me motivated. And
who was it? Do you mind sharing who it was?
No, I don't mind. His name is Doug Rumer.
Okay. What's the name one more time?
Doug Rumer.
Okay. Yeah, I'm not familiar with him, but yeah, that's one of the most important things a mentor could do for somebody, is to encourage be an
Absolutely.
encourager.
Absolutely.
And you know what, Sylvia, innately listening to your story, how courageous of you to, a lot of people talk about it. I talk about it. Well, I'm going to leave the US and look for a different life. And it's so much easier to say than
Yeah.
actually do, and leave your family behind and then take on trading. You're a warrior.
Thank you.
All right. So anyway, a very interesting story. You're still in Germany?
Yes, I'm still in Germany. I was traveling I was in Bulgaria a while ago. So normally I'm switching those locations because I have my family in Bulgaria still and I want to visit them. But now with this COVID, I'm stuck here for a while. So.
Yeah. If you look at member chats, you have a couple, I believe, countrymen that are saying hello to you, Georgie. And so.
Nice. Hi everyone.
Yeah,
Nice to see you. Some Bulgarians too.
Yeah. See, so what was the reason was it economic opportunity that motivated you to go to Germany from Bulgaria?
Yeah, absolutely. So in Bulgaria, the life is not that easy. I am sure some of the people who are here in the chat will agree with that. So life is not easy. You have some opportunities. Now it is getting better, but back then I didn't see a lot of opportunities to go on a certain career path. So I thought somewhere in a foreign country like Germany, which is more advanced country economically, I thought this is where I can achieve more, and that was pretty much the reason. I didn't want to stay there and not knowing that all my work of studying and stuff like that would pay off. So that was the decision behind that.
Okay, so I believe we're looking at Nasdaq here. Is that the chart you have? Okay, so tell us, what you're looking at. It doesn't look real complex. I noticed you have, is that RSI at the bottom? I'm a big user of RSI. And what are those, moving averages or bands?
Averages, yes. So basically, I am really trying to keep it as simple as possible. I am not a fan of too many indicators, too many drawings. I don't like all that. My whole focus has always been looking at the support and resistance areas, drawing those areas on the chart and trying to, to go from there. So for example, I try to, when I open up the chart, try to identify those support and resistance areas. For example, here was a previous support. Here is also a small support area. Here was a resistance area which was rejected nicely yesterday on the Nasdaq because of this news. Here is another high. So those are the levels which I'm looking at mostly. And then I'm trying to work my way on the chart or trade from those levels. I'm not really paying. So I'm looking at those moving averages and RSIs, but I don't really use them for entering or exiting the trade. So
what do you use RSI for? Just overbought, oversold markets, or do you use them for divergences? Or for example, in August, the RSI was at a new high along with price, and I call that a confirmed high, and there's a message in that for me too. So how do you use RSI?
So RSI, in this case, I used to see those overbought areas. I try to not to continue longing, or mostly of the time for looking for scaling out of my position. So I'm trying to buy the dips. And after that, when I'm always in that trade, trying to look at the resistance areas in combination with RSI and try to scale out of these positions near those resistance areas, and looking at the RSI as well. Here was a point where I started closing most of my positions, actually even earlier, even here. Then we saw this huge move. I started closing, and see we have then after that this huge drop. So mostly for scaling out. I'm not shorting. I never short the US indices, even if
interesting.
Yes.
Okay. There's nothing that's actually it's been a great policy.
Yeah.
I
Yes.
wish I had. I wish I over the last 10 years. I wish I would have had that rule. So, so do you also? You talk about scaling out. Do you scale in?
Yes, I do. So most of the time, maybe for the people out there who don't know my strategy, I'm looking for, of course, looking on the US indices most of the time, but also I'm looking at a lot of stocks. So I'm trying to build my watch list based on some growth stocks. So I'm looking at the fundamentals of those stocks, trying to find stocks with growth potential. And from there I start longing them, and because I'm looking on the fundamentals of those, looking for growth, there is for me no reason to short them. So I look for specifically only for long setups, and stuff like AMD, for example, or Zoom, which are not getting a little bit slaughtered in this current correction. But
yeah, let me ask you this: do you mainly trade off a daily, or do you drill down on time frames, or are you able just to trade off a daily chart?
I am mostly trading of the daily. I'm looking at the hourly as well, just to see how is the picture there too. But most of the time I'm looking at on the daily, using some options as well for the indices. So for this, for SPY and Nasdaq and sometimes YMs, I'm looking to use options on those, just buying calls as soon as I see some bigger pullback. And the other stocks which I'm trading, I use just the stocks. So that's how.
Okay, so let's talk about what's happening recently. We had you talked about the nice rejection we had yesterday, and we're getting a little follow through to the downside. I believe the best trades are not the ones where you turn on your platform and say, well, you know what, that looks pretty good, I'll give it a shot. Because that is that, and I've done it, so I still do it sometimes, but that's really kind of impulse trading. And the best trades are things that you plan on your kitchen table. So what's your plan going forward with the Nasdaq after digesting the last 2 days action?
Yes.
Where would you be looking to start buying it again?
Well, now it depends a little bit on the current sector rotation. So we saw, like you said already, we have this huge gap up yesterday. It was we hit the 3,000. We see exactly 30,000 here on the Dow. Which means people started, of course, based on this vaccine news, started to put money into that cruise airlines and stuff like that, and getting out of those home plays like Zoom and all those software plays and stuff like this. So I'm trying to stay patient, see, of course, what is going to happen here. But mainly the support levels are here. This is the 10,944 and 10,668 areas. So if we see some kind of a consolidation into those levels here, I would look for some reversal candles, stuff like this here, where I start longing. If we hold, like I said, with those consolidation or just something similar, to see this is a rejecting area and will continue to go up. And that's my plan. Like I said, I'm not shorting those. I'm waiting. If I see here starting to build a base and consolidation area above the moving averages, and if we don't test those lows, it's fine by me too. I'm just trying to find out what this thing is going to do in the next days, weeks, and I will go from there.
Okay, so I'm guessing the big blue line is your 200-day. What are the moving averages that you have that are very close and intertwined and crossed with each other up there?
Yes. I don't use them really for a buying signal. I'm trying just to find out, is it staying above or below? In a sideways market, it is hard to use moving averages anyways. So we are currently in this kind of a phase and cycle here, where you have this sideways action where.
And what are they, like 9-day? What are the different moving averages that you're using there?
So the different moving averages I have here, 9, 20, and 50, and this is here, like I said already, the 200. So this is how I am.
How did you select those to use those? Any, just
That's a good
something
question.
that, I've used things that they were just on my chart, so I started using them. Was there any kind of selection process in coming up with
I don't think so. I just started somehow with a 20 and then I put in the 9. So like I said, this is not really something I'm paying. I just want to see, is this above? Are we in an uptrend? And is it staying above or below? The problem with all those indicators is that, as you probably already know, they are lagging indicators. And in different market environments and market cycles, you cannot use them. So if we go back here, it's pretty easy to looking back in a trending market. It's very easy to use those moving averages. But if we come here into that kind of a consolidation sideways market cycle or distribution side market cycle, you cannot use them, because look, first you're below, then you're going above, then you're below again. So here is it harder to really use them. So I have them just to see as an orientation, but the most important thing for me are those lines here which I'm drawing, which are the support and resistance. And so I didn't really paid attention how to choose those moving averages, and I don't make any decision only based on them, so to say.
Okay. Yeah. Does currency come into play in your decisions? Do you pay attention to the euro, the dollar, anything like that, or it's just currency that you use to live with?
No, I mean, also I am looking at them, but I don't really trade them, because I just never found any consistency with currencies.
Okay.
I know a lot of traders who are successful with that, but my consistency came with those US indices and US stocks, and from there I tried to develop the strategy which I'm using, but somehow the currency never worked for me. I don't know.
Okay. And we're probably at this time of the interview where you could show your website. And do you teach or put out a letter? Do you have a business model besides your own trading?
Not really. So let me see if
I noticed you do have a website. So are you just kind of paying it forward and just trying to help people? Oh, there you go.
Here is it. I made a blog post yesterday. Yeah. So here is it. I basically started all this for just for trying to help some people, having this YouTube channel. I don't know if a lot of people asked me for personal trading. I started this, but it takes really a lot of time to develop someone. It's just not easy. It takes a lot of work, and the other people have to work as well, so this is nothing.
And patience.
Yeah, absolutely. A lot of patience.
Yeah, a lot of patience to teach. So interesting. So you just you're sharing your journey and things that you're looking at on your website, and there's no charge. Is that correct?
Correct. I'm having a watch list this is also free, a watch list every week, where I am putting my top 3 stocks with my fundamental and technical analysis, and this is basically my growth stocks which I'm looking at. So they're been pretty nice place, and a lot of people made money on this watch list, and I'm happy to see that someone really makes use of this.
Yes. Okay. All right. Well, where are you going in the car? I see you're driving somewhere. Were you driving to get set up for this interview? But looks like a Mercedes to me. The only thing that's missing, and have you noticed this, Sylvia? It kind of makes me laugh. How some people market and they show their Ferrari parked and getting on their private plane, and they have the secret to trading, and it's only going to cost you $999.99. But yeah, so
no, this is I'm a Mercedes fan, so this
Yeah.
is.
Okay, now I know why you moved to Germany. Okay, so so you could go visit the plant and pick out your car custom. You
Yeah, I
know,
do this. Yeah.
yeah, you do that?
Yeah.
Oh my goodness. So, how are things in Germany right now with COVID? Are you guys in some type of lockdown right now in
We are
Germany?
currently in a light lockdown, yes. So they are basically closed, the restaurants and everything else. Schools are open, and
Yeah,
we are allowed to go out. Fortunately, there are some countries where you're not even allowed to go out. But
yeah,
so I'm glad about this, and I hope this is going to be soon over with this vaccine
yeah, the whole
somehow.
world.
But
Yeah,
to be honest with you, I don't see it coming very soon. I know there's a lot of euphoria after those news, but I think
yeah.
it's take a little bit of
Maybe another year at least, huh?
probably, yes.
Yeah. Well, if I'm ever in Germany, I'd like to go for a ride with the top down with you. But you know what you become after having an interview with me? And I was very gentle. Some people I really grill. But you're now my trading warrior sister.
Nice.
All right. So, you have a wonder, really, I admire your courage, Sylvia, and really hope that you have continued success, and perhaps one day, you and your family are all in one location, and
Thank
hope
you.
that you all remain untouched by this invisible enemy. And really, you're kind of a testament to um, being an overcomer, because this is not really an easy thing to do. And if you're making a living doing this for yourself, you're a rarity. And
Thank you. It
and
is
really,
hard.
it is. And I commend you for having the courage and the persistence and to overcome the adversity that we all have to overcome as traders. Congratulations.
Absolutely. It is a
And
long and hard journey. So, and lots of patience, but you know that probably. So thank you a lot
yeah, it
for
was
that.
really nice meeting you, and everyone. I would go to Twitter and follow Sylvia. She has no X to grind, and pay attention to some of the things she's doing. You're looking at someone who makes her living off the market, and I'm glad I reached out to you on Twitter, Sylvia.
Thank you, to Dale. I'm glad we had this beautiful opportunity to talk to each other. I'm happy to connect with other traders, and it was a pleasure to me to talk to you.
Okay, well, we will do this again, and good hunting, and I hope you have a great fall trading season.
Thank you. Have a great trading, everyone, too. Thank you.
All right,
Have a
Sylvia
great
Bellrock, everybody. Tell me that isn't an inspiring story for everyone out there.
Thank you,
And
everyone.
yeah, and I'm inspired. So
Nice.
not perspired, inspired, and that's our turnaround Tuesday, everyone. So remember, don't just count your pips, count your blessings. Adios. We'll see everyone tomorrow. Thanks again, Sylvia.
Thank you,
Adios.
too. Thank you, everyone. Bye.
Bye-bye. You're welcome, Trapal, Hugo, Michael. See you guys tomorrow.